We keep hearing about the great wealth transfer, the estimated $84 trillion in wealth that's going to be passed down from baby boomers to the next generations by 2045. But there is an opinion column on Bloomberg that calls that notion a delusion. In their words, it's because baby boomers are going to be spending much of that money on their future health care, which includes long term care. Gentlemen, isn't there a way to plan for this so that the nursing home doesn't get that inheritance?
I think we ask this question a lot when we talk to clients as far as what are their goals and objectives, is leaving a legacy. And I would say, a lot of our clients have the goal to spend their money. I mean, many people I talk to say the ultimate retirement plan is their last check bouncing. Mm-hmm. And I think they think that because they're planning on going out and having fun, not necessarily because of healthcare related expenses. But it's certainly a big issue to take a look at when, if you look at the cost of like a nursing home in today's dollars, it could be $10,000. So imagine, a 60 to 65-year-old, what that expense could be in the future. And so if I go back in my career, and it kind of dates myself now because I've been in the business since 1994, but when I originally got in the business, long-term care insurance was a common solution that people would go out and you would purchase a long-term care policy. You'd pay an insurance company a premium. In return for that, you'd have a set amount of benefits that if you or a loved one needed long-term care, again, depending upon how your policy was put in place, it would pay for that bill. But what happened over the years is the insurance companies of America really mispriced those policies. So it's extremely common today that I have people that come into our office that they constantly are getting these premium rate increases. And these insurance companies are raising the premiums 50, 75, 100% in some cases. And in addition to that, not only is it challenging for that person to determine should I keep paying for this premium because it's one, something they never want to use, right? Nobody wants to have a healthcare crisis. Two, if they don't use it and simply sail off into the sunset, it feels like it's money out the window, wasted money. So a lot of these insurance companies have gotten out of the business of traditional long-term care insurance. It's actually hard to find many traditional long-term care insurance companies today. What the shift has been towards a life insurance hybrid policy. That's kind of been the more popular option, I would say, in the last 10 to 15 years that we've been working with them. And, I actually like the life insurance route a lot. It's a situation that I have even for my own family, and it tends to be more of the go-to route that we talk about. Chaz and I were talking a little bit before getting on the show today, and I was describing a situation of a client that their investments have done really well. They've got some great growth over the years, and they were asking me the question about getting rid of their insurance policy because they had such a big net worth saved up that they didn't feel like they needed life insurance anymore. And that's probably true. As I mentioned in an earlier segment, my oldest son is now, finished in college, off on his own, and doing great things. And my oldest has just got another year left. Life insurance needs can go down when you think about it in the traditional sense. But in this case, where life insurance is great in his situation, I said, you know what? Take your money that you have, spend your money, and enjoy it with your retirement. But by keeping that life insurance policy in effect, it allows you to still pass on a legacy to your loved ones. Now, in addition to that, if you have one of these hybrid policies, the policy allows you to accelerate your benefits, usually in a couple different situations. So one of the situations would be considered a critical illness. Critical illness is when we think of what I refer to as like a one-time type of an occurrence. So it's usually a diagnosis of cancer, a heart attack, a stroke, an organ transplant. You have the ability where you can accelerate a percentage of those benefits. So again, having a client has cancer, there's not too many good words I can say on radio or, about cancer. But if we think about it, our healthcare system is also somewhat challenging today on how it works. And so if somebody wanted to, have an experimental treatment that maybe isn't covered by their traditional health insurance plan, if they had one of those hybrid policies with a critical illness, it would allow them to accelerate some of those benefits. They in turn could pay for that type of care on their own by accelerating the benefits. The next thing it has is it has a chronic illness benefit. So the chronic illness benefit is the one that we think of when we think of inability to perform activities of daily living. So usually the things that people ultimately end up needing, like nursing home care, 2 out of 6 activities of daily living. A lot of the policies will allow you to take up to like 24% of your benefits. So again, if you had a $100,000 policy, it allows you to take $24,000 a year out of the policy to use it. And where I like that is, $24,000 a year in that example is probably not going to cover a nursing home bill. It would help pay for that, but more importantly, if you have one of these cash payment policies, that's $2,000 a month. And so if somebody working to develop a plan to keep them out of a nursing home, $2,000 a month would go a long way around the house when you wanted to hire the neighbor kid to mow the yard or Molly maids to clean, maybe Uber Eats to bring you food. That could go a long, long way. And then ultimately, a lot of the hybrid policies also include terminal illness. So heaven forbid your family doctor indicates that you're terminally ill, usually within, say, a 12-month time frame. It allows you to accelerate your benefits. Maybe if you wanted to get your financial affairs in order, maybe if you wanted to take the whole family on a family vacation, spend the last year doing what you wanted to do. It has that. Now, in addition to that, it's also a traditional life insurance policy. So again, if you don't need it, you don't have those crises come up along the way, just sail off into the sunset one day. It's going to be paid out life insurance. And life insurance is paid out income tax-free, probate-free cash to your named beneficiaries, which oftentimes is much better off than leaving a retirement account, because a retirement account, usually for non-spousal beneficiaries, aka children, becomes a tax time bomb.
Yeah. Well, you've always talked about that policy being, we've talked about it kind of being a Swiss Army knife, if you will. And I still remember to this day, my grandfather had, the red Swiss Army knife, had the blade part you pull out, and he'd used it so many times that it kind of looked like a toothpick at that point because it was all worn down. But it's a useful tool, and I kind of described the IUL hybrid policies, kind of something like that, where, like you said, it covers a lot of different calamities. And going back to a previous segment, every dollar has to have a purpose. And sometimes $1 has multiple purposes, because if you haven't saved proficiently enough to be able to kind of dedicate, portion of your retirement just to long-term care. I mean, I think just in the next 6 years, from 2024 to 2030, Nolan, there's going to be about 30 million people in that baby boomer generation age. We call it peak 65. And 53% of those people have less than $250,000 in assets. So that's not going to be enough for healthcare alone, let alone all the other expenses. And so if you're faced with making some difficult decisions, or with, as far as investments, what to do, maybe we haven't saved as much, that policy has a lot of utility, because it first and foremost can protect against the long-term care issues, like you said. It builds cash value, so it's still working as an investment. And you can borrow from it in many cases in an emergency, and sometimes that cash value can actually grow to a point where the interest from the cash value is actually paying the cost of the insurance. So it covers a lot of bases. Definitely something that I personally own, that if you don't have life insurance, this is a great tool. I know people always say buy term and invest the rest. You have to be disciplined and diligent to do that, and in some cases it works, but I think the IUL is a nice mix and a nice combination of investment and life insurance and long-term care benefits that make a lot of sense for a lot of people.
That is true. And so, when you look at it, there's a lot of different choices. And again, these hybrid policies, sometimes it's term insurance can make sense for younger folks. One of the things that I think is important is, if you're going to get a term policy, make sure that you have the no evidence of insurability conversion option. So later on in life, if you do decide you want to switch it over to a permanent policy and your health status changes, you're able to do that. I had a gentleman who was a police officer, came in, and the life of police officers don't get enough credit, I think, from all the things that they go through. And so the stress of being a trooper for all those years led him to have a couple heart attacks. But when we did a review of his policy, his term policy allowed him to convert it to a permanent policy with no evidence of insurability. And so he could keep that policy in effect. Otherwise, in most cases, your policy becomes worthless, right after whatever that time frame is, or it becomes unaffordable. And these policies are also available in a whole life or an IUL. And then I had another interesting conversation from somebody on our YouTube channel that reached out to us that wanted to look at a VUL policy, which is one that allows you to fully participate in the growth of the market. So giving you great growth potential. Of course, it has market risk associated with it. But these type of things can be really customized overall to your individual situation.
Yeah, and the last thing I'll just add to that, Nolan, is, for the gentleman, the police officer that you talked about, something like that where it becomes maybe a rehab stay that's not that serious, if you have the ability to stay at home and recover maybe in a healthier environment, that could keep you from going, something relatively, pretty serious, moderately serious, to something that's an extended care stay now, in a full-blown nursing facility. Just saying, having that extra resource to recover at home could be a benefit as well.
Yeah, so lots of solutions here. So if you have an old life insurance policy and you want to find out maybe about how to get a hybrid policy, maybe it's an opportunity to upgrade the policy that you have. Or if you're saying, you know what, I need to develop a plan to protect my assets if I need long-term medical care in the future and I want to do it without buying traditional long-term care insurance, reach out to us. We can put some ideas together for you on using life insurance as a hybrid policy.
And to get started, that number, once again, 419-794-3030. As people are living longer and longer, the possibility of needing some form of long-term care assistance turns more into a probability. And there's a various number of options out there to be able to find what's going to work best for you, what you're most comfortable with. Schedule a time to speak with the team, 419-794-3030, or the website, arhq.com.